Ever feel like investing is a battlefield? You've got fear on one shoulder whispering, wait, the market's too high, and greed on the other yelling, go, 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 don't miss out. It's a game of trying to be a psychic, and spoiler alert, you're not. So what if I told you the true superpower of investing isn't about timing the market, it's about ignoring it completely? Well, get ready to unlock the ultimate cheat code for young investors, dollar cost averaging. Okay, let's make this crystal clear. Dollar cost averaging, or DCA, isn't some complex financial voodoo. It's simply the genius strategy of investing a fixed amount of money at regular times, no matter what. Think about it this way. Your favorite coffee shop has a latte that changes price based on the weather. Some days it's $5, other days it's $3. Do you check the price every single morning, desperately trying to get the cheapest latte? No, you just grab your coffee when you need it. DCA is that same set it and forget it simplicity. It's about consistency, not about a desperate hunt for a deal. Now, here's the part that makes this a genius move. Let's imagine you invest $100 a month. Month 1, the market is high. You get a few shares. Okay, cool. Month 2, the market crashes. The news is terrifying. Everyone is freaking out. But your automated dollar cost average purchase goes through and bam! Your same $100 just bought you a ton of shares at a discount. Month 3, the market starts to rebound. Your purchase still goes through, and you get to ride that wave back up. Your automatic purchases are buying more shares when they're cheap and fewer when they're expensive. You're literally taking advantage of the market's chaos instead of being a victim to it. And here's the best part. In the past, setting this up was a bit of a hassle, but today it couldn't be easier. You can literally implement this strategy with a few taps on your phone. Most of today's brokerage apps have an automatic investing feature. All you have to do is link your bank account, choose the investment you want, like an S&P 500 fund, set a recurring amount, maybe $25 a week or $100 a month, and the app does the rest for you. You don't have to remember to log in, you don't have to check the price, and you can even start with tiny amounts of money thanks to fractional shares. It's truly investing on autopilot. Okay, so that sounds great in theory, but does it actually work in the real world? Let's look at one of the most recent and dramatic events we all remember well, the COVID-19 market crash. Imagine you started investing just $100 a month into an S&P 500 fund in late 2019. Then, in March 2020, when the world felt like it was shutting down, the market fell a shocking 34% in just over a month. While everyone else was panicking and selling, your consistent $100 a month was buying shares at incredible bargain prices. By the time the market had fully recovered and then some, you not only would have recovered your losses, but you would have been well on your way to a significant profit. That's the power of DCA. But this isn't just me saying this. The most respected minds in finance agree that consistency is key. Author and investing expert Morgan Housel, from his smash hit book, The Psychology of Money, which has sold millions of copies worldwide, said it best. The single greatest edge an investor can have is a long-term orientation. The easiest way to get there is to ignore the daily fluctuations of the market and be a consistent buyer over time. And while they may not use the term dollar cost averaging, legendary investors have been preaching this philosophy for decades. One of the greatest of all time, Peter Lynch, from his best-selling classic One Up on Wall Street, made it crystal clear with this famous phrase: "It's not about timing the market, it's about time in the market." And that right there is the entire philosophy of dollar cost averaging. This simple strategy gives you 3 insane superpowers that most investors don't have. Number 1, the anti-panic superpower. DCA is the ultimate cure for FOMO and FUD, fear, uncertainty, and doubt. You don't have to stress about market crashes because you know you're getting a deal. It zips your emotional brain right up and puts you on autopilot. Number 2, the shield against risk. By spreading your purchases over time, you're building a fortress against bad timing. It's the most effective shield you can use against the randomness of the market. Number 3, the discipline building superpower. Consistency is the real key to wealth. DCA forces you to save and invest on a regular basis. You're not relying on willpower or a good mood. You're building a habit that will pay off for the rest of your life. This strategy is for you if you're a long-term player who wants to win the financial game. If you're a beginner who wants to start investing without all the complicated research, and if you're a smart person who understands that slow and steady almost always wins the race. You don't need to be a Wall Street guru, you just need a plan. And this is the simplest plan there is. So guys, what's your first step going to be? Are you guys going to start your dollar cost averaging journey today? Let me know in the comments below and subscribe if you want to know the next steps to get this process going. We're here to help you win with money. See you guys.